So we're starting the third part of the 4-year Bitcoin cycle, which means I come bearing good news. The price of Bitcoin is highly likely to increase in 2025. What does this mean? Well, you can make more profits. Yay! In this video, I will explain the Bitcoin 4-year cycle from scratch and help you understand how you will make profit this year and the next. So stay tuned because this could potentially really grow your wealth. It's not a get-rich-quick scheme or some hopium. No. Let me start by taking you through the previous Bitcoin cycles. Okay, so let's have a look here. For 3 years, the price of Bitcoin increases until in the 4th year, the price comes down. Can you see back in 2010, right? So it goes up, 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 down. Then again, up, 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 down. Then up, and only slightly up, and that was because of Celsius, Voyager, and FTX, and all of this, so it should have been a lot higher, and then down. And now you can see it goes up, and what do you think is going to happen next year? It's going to go up again, right? So let me explain why this happens and what it means for investors like you and me. So how is Bitcoin, this digital currency, actually created? Who creates them? Bitcoin is basically a series of transactions which, when there are a sufficient number of transactions, they make up a block. And once the block is complete, full of the transactions, a new block of transactions is formed and linked by a chain of numbers to the old block, hence the blockchain. Now, what has all this got to do with the supply of Bitcoin? It's the so-called miners who have to solve the mathematical problems in order to validate and secure all these Bitcoin transactions. Consider this as a cryptographic puzzle where miners compete against one another to solve and validate transactions. The first ones to do this gets a reward. And guess what the reward is? You've probably guessed that this reward is Bitcoin. So how is Bitcoin supplied into the market? Well, it's the miners selling some of their rewards to pay for their mining rigs, electricity bills, staff, and other costs of their mining operation. That's how Bitcoin gets into the market. Got it? Okay, so far so good, but where it gets really interesting is that the Bitcoin reward that is paid to the miners is actually halved every 4 years, which I will explain in just a moment. But I hope I have touched upon the basics of who and how Bitcoin is created. So what is the Bitcoin halving and why is it important? Well, the Bitcoin halving or halvening is an event that takes place every 4 years. This is where the amount of Bitcoin paid to the miners is halved. To give you an example, before April 2024, the reward for mining a new block on the Bitcoin network was 6.25 Bitcoin. And this was halved in April 2024, meaning that miners were rewarded with only half, 3.125, when they mined a new block. Now let me explain why the Bitcoin price increases after the halving. Why does it do that? It's actually quite brilliant. Bitcoin was actually created in 2008 in direct response to the devaluing of our currency, pound, euro, dollar, etc. How? By governments printing money. Because the more that is printed of anything, the less value it has. With Bitcoin, the halving is written into the protocol, meaning less coming into the market every 4 years. Now, the more scarce something becomes, the more it is valued. And that is if demand stays the same. It's simple, supply and demand. If there is less of something and constant demand, the price tends to go up over time. Imagine if we were to halve the supply of gold every 4 years, and you know this was going to happen. We'll halve it, 4 years later, halve it again. Wouldn't you buy as much gold as you could possibly buy now because you know that with less supply, the value would increase and prices would go up? That's the same with Bitcoin. The question is always, when should I buy, right? So, what should you do? Well, like I said, we're currently ending the 2nd year, going into the 3rd year of the Bitcoin cycle, which means that if things go the same way as they have done before, 2025 is very, very likely to be an incredible, profitable year. And that is why we are accumulating Bitcoin every time it either falls or has a pullback, ensuring that we have as many Bitcoin as possible before the halvening effect actually takes place. And of course, the next question is, okay, Marcus, that's great, but when do we sell? That is more difficult and also a lot later. I can tell you one thing. With 25 years of trading and investing experience, I can promise you, right, getting in is much more simple. It's getting out that will dictate whether you get rich. And since timing the market is not easy, what I do is gradually scale out as it goes up. And we call this milking the cow. Don't kill the cow, it's dead, right? That's selling everything. What you want to do is sell bits of the cow and to keep bringing in the milk, moo, bits of yogurt. You can make cheesecake and whatever else you make with dairy products. And then, as the next cycle comes around, you want to have plenty of your powder dry to start buying again at the bottom of the cycle. Remember, it's a 4-year cycle. Well, to know exactly how much I buy and how much of my holdings I sell and when, I follow the crypto cost averaging strategy, the CCA strategy, which can be found in a free guide in the description. I hope this video was helpful, and if you have any questions, please drop them in the comments and I'll see you next time.